Yeah. All right. So we have, well, we probably will have more people joining, but I've been watching the numbers. We had a huge group for the first call, I think it was. Second.
Third official.
So third official. And so if you're here today, it means you have a certain quality to you where you're ready to learn something new, even though it's very a lot of new information, which is kind of a big task to take on. But Vlad is one of the best that I've met that does this. So it is an incredibly valuable class. And those who are not coming, of course, you know, it's learning something like this. It takes something. So I want to congratulate everyone who's here today to really get into the depth of this. It could be a very, very, very profitable thing to do. So again, we appreciate Vlad for being here and sharing his wealth of knowledge with us. So let me turn it over to Mr. Vlad. Was I muted? Oh, you.
Thank you for these good words. I'm always happy to be a teacher here, and thank you for invitation, Micah. So I think I already can start, or we need to wait some more people because it's on the 77 now. We had a little bit more previous time.
Well, those who are on time will get honored, and those who are late will just have to miss some of the good information.
Okay. Anyway, I can start with covering what we had on previous lesson. Just small reminder. Let me share my screen first. So just tell me if you see everything, if you hear me good, and if we can start.
Yep, you're good. Looks great.
Perfect. You remember previous lesson, we were covering the topics, we were covering two different scenarios which can happen to the liquidity provider. In case if the price will go up, you'll be full USDC, or in case if the price will go down, you will be full AVAX. So this is called impermanent loss, and to continue farming, you need to making rebalance. And I told you that we built something on Leveler, some special instruments which will help you to balance all these negative points of the liquidity provision, making it more profitable. And this is what about the today lesson gonna be. So today we're gonna cover only like 3 topics, but they're very essential to understand. And these are leverage, hedging, and also we will finally like fully understand how the miracle leveler is working, and how we can, as a liquidity providers, get some profits of using it. So I'm sure like most of you have heard the word leverage because it's like the most popular word in crypto. Everybody is like leverage trading, margin trading, but we need to deeply understand what exactly it is and how it works. So let's start with very easy story. For example, you're super confident about the Bitcoin going to 100K, and so you want to earn something because you're super sure that Bitcoin will do it. So, but you only have, for example, I don't know, $1,000. So you're quite limited in your earnings. but you're super sure about your strategy, so you want to go somewhere and borrow some more cash, some more money to buy more Bitcoins. And then when the Bitcoin hit the price of 100K, you're gonna sell it and return the debt. So this is called long play, meaning that you expect the price to go up. And so how it works mechanically. You need to borrow some cash, then you need to go to the open market and buy some Bitcoin with this cash. After you did it, you have the debt dedicated in cash and the value of 9. For example, the Bitcoin now 90K, 900,000. So you have a debt of 90K, and you have a Bitcoin value of 90K. And if everything were good, the price of your Bitcoins goes up, and now it's worth 100K. So you can easily sell them and return the debt. But in case if you would be wrong, you're gonna be liquidated because you need to be always your position should be always be possible to return the debt. So this is the rule of liquidation. But there is also another way of managing a leverage. It's not a leverage. It's another way of trading. So there is a long play, and also there is a short play, which we're gonna cover a bit later. But first of all, we need to understand that leverage consists of two things, in its fundamentals. This is your collateral that you provide, and the debt that you are taking against this collateral. So just keep it in mind. You will find out later why I made such a big accent on that. Now let's talk about short play. How actually can we earn if we are, for example, super confident about the Bitcoin going down? So how can we really earn something by any of asset losing its value? So it's very easy. The rule is you need to borrow it. So when you borrow something, you actually short it, and this is the main rule that you need to remember. So let's take a look at this example. So now everything the same. You also have some plan. You also have some strategies but in this time that Bitcoin will go not up but down, and so you borrow not cash but Bitcoins. When you borrowed Bitcoins, you go to the open market, you sell it by the current price of 90K, and now you have 90K of cash dedicated in US dollars, and the debt dedicated in Bitcoins. And if the price of Bitcoins will go down, so the value of your debt also will go down. And so you can now take your cash, buy the Bitcoin with the price of now already one Bitcoin will cost 80K. So this is the way how you made extra 10K by just borrowing the Bitcoin and the Bitcoin losing its value. So one more time, very simple rules. If you borrow something, you short it. Now you remember this scheme from the first lesson. Sorry, I forgot to ask if everybody is on the same page as me. If everyone understood how the short play works, please write me in chat. not sure. Yes. Yeah, so more people. One more time, we have this in records. So if for some of you it's quite tricky to get, and it's really so, just feel free to find some records. So now let's take a look at this scheme from the lesson 1 that we had before. As you remember, we have here we have a decentralized exchange with some TVL, which is provided by the liquidity providers. So this is actually 2 assets, and while these assets being traded between themselves, we gain some fees from every of these swaps. But with Leveler, we can build some more sophisticated way of providing liquidity. So, and it looks like this. So you, as liquidity provider, you provide some collateral to the Miracle, not the Miracle, sorry, to the Miracle Leveler. And Miracle Leveler, taking some debt from the lending pool against your collateral. Altogether, this, for example, 3x position going to the decentralized exchange and generating some fees for you. And as your position here in this example is 3 times bigger, the fees are also 3 times bigger. So that compared to the non-leverage liquidity provision, in this case, we can have like 3x up to 3x more fees with the same amount of money. And also, as I already showed you, the debt can be dedicated in 2 different tokens. So we can take Bitcoin or AVAX or whatever as debt, hence shorting it. And also we can take a cash or dollars, USDC if you want, to cover our position. And so we can get some kind of delta neutral strategy. So with a good combination of what you borrow, you can stay delta neutral to the price fluctuation of the market. So I hope, tell me if you guys got it, because I know it's quite tricky again. Maybe I need to repeat something. Please repeat.
Everybody go into the chat and really communicate with Vlad. He's asking for your input. So please feel comfortable to click on his name, to communicate with the host, co-host, so that you can help guide him if he needs to repeat something or go into a little bit further detail. Okay, thank you, Ambrose. So please communicate, the things that you are needing, because that is absolutely why he's here. And Vlad, I so appreciate that you're even seeking out that, as opposed to just like flying through it all. So thank you for that.
Yes, you're welcome. So everybody is asking me to repeat this part. Yeah, we will also have it with numbers, no problem. But one more time. So when you short something, you need to borrow it. And so you also can borrow simultaneously 2 different assets. That is what possible to do on Leveler. And due to that, you have you can be in you can build many different strategies, and this is what I'm trying to teach you here right now, explaining all these fundamentals for you to create the strategies by your own, because I think this is the best way to show you what Leveler can do. So one more time, a short play. you're expecting something to go down. That is why you're borrowing this asset. In this example, this is Bitcoin, but it actually does not matter. You can borrow whatever you want if you're expecting that it will lose its value. So when you borrow something and then sell it, after that the price is going down, you can buy this asset back with already like smaller amount of cash. And the difference between how much you sold and how much you buy back is in your pocket. So voila, you made money. And in that scenario, there is a person who is lending something for you. In the crypto, we call it lender, and it actually looks like lending pool. So if you're expecting Bitcoin to go down, to go up, and you want to increase the numbers of Bitcoins, for you, this is a very good strategy to lend Bitcoins and expect some people who has another view on the market. They expect Bitcoin to go down to lend these Bitcoins. And so if you are right, you will have more Bitcoins than you had initially, and their price also going up. But if you have another point of view on the market and you want to short it, you want to borrow Bitcoin. So this is two different strategies, and both these strategies are possible to make on our leveler. Yep, you're welcome. So now this point. So this is what we try to combine. So leveler exists to provide a leverage and a hedge. Why I said hedge? Because before we were on previous lesson, we were studying the what's gonna happen if the price of the liquidity will go down. And this means that you as liquidity provider, you're gonna lose some value. I wanna even find this slide for you. So here, you remember that? If the price going up, you're earning, of course. But if the price going down, for example, here with AVAXes, we had like $69 of value in the very start. But after providing liquidity, gathering some fees, we only had 65. So this means that when you provide liquidity, you're making a bet that the market will go up. And if you're wrong, and the market will go down, you're gonna lose some value of your provided assets. And that is why it is so necessary for the liquidity providers to have opportunity to borrow some more, for example, AVAXes, and provide them as liquidity. And in this scenario, if you will do like that, and leveler allow you to do like that, you're gonna lose value in your position, but also the debt will lose its value. So now when the price of the assets going down, you're losing nothing because you simultaneously short and long in the same position. And it is called delta neutral, and it is possible to do only with our leveler. And so how it works, one more time. You provide some collateral to the leveler. Leveler taking a debt against this collateral. Altogether, all these coins are going to the decentralized exchange where this liquidity sits and is used by traders to buy and sell and do whatever they want to do with it. And by each of these swap, you're gonna gain some fees. And now let's look how it looks like with numbers. So for example, you have here $100 of dollars, for example. You provide it to leveler, you're lending another 200, and altogether these 300s going to the decentralized exchange, sitting there and collecting some fees. And for example, if trading fees are 1% daily, this means that you're earning $3 on daily basis. So with the $100, you can earn $3 daily, and with the really nice risk management, you can also make it almost non-risk, because you can borrow cash and AVAXes in the such ratio that will give you a delta neutral. So you're like, you will not earning because of the price going up, and you will not losing because the price going down. You'll stay delta neutral. So I hope if everything is clear, ask me questions. I already have one. What is this called? It's not short play. Is it leverage? So short play and long play, this is just the name of the on what you bet. So if you're betting on the price going up, this is long. If on the price going down, this is short. And also you can be delta neutral. Is delta neutral a hedging? Not really, because hedging is called something when you want to hedge yourself. So if for your strategy, this is if for your strategy you need to hedge the market going to down, so this is your risk that the market will go down. So you need to obtain a hedge by borrowing something. So I would say you can be a delta neutral due to hedging your position. So yeah, so on this slide that is on the screen right now, we don't know if this is long play or short play. This is just explaining the leverage. And would it be long play or short play or delta neutral play depends only on what you borrowed. So as you can see here, we borrow from the lending pool this 200, and we don't know in which currency or in which asset we borrow this 200. I did it just for example, and this is for you to decide in which currency to borrow. And we will go to the leveler right now after I finish the questions and show you how you can do it. How does Miracle make money to make it worth their while? So for the Miracle leveler, they have some fees by providing such a good service for the liquidity providing. So this is the way how we earn money. Not we, but the Miracle leveler. So if you don't earn and you don't lose with delta neutral, how do you ultimately earn? So you earn by fees, because being delta neutral to the market does not mean that you don't have any asset that are sitting in the decentralized exchange. This is the idea. That is why we're not just holding the tokens. We provide them to the decentralized exchange, and there where they are swapped regularly, frequently, and we gain some fees on each of these swap. Where did the 200 come from? Our own money on the leverage from 100? No, this is not your own money. This is money from the lending pool. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . So hedging a position is being an LP and also borrowing. Yes, so in this case, we can hedge only by borrowing something. And when you borrow something against your collateral, you automatically have a leverage. And that's why we need to know what is leverage, how our exposure is changing depending on what we are borrowing. Because if you're borrowing cash, you're long. If you're borrowing asset, you're short. Always remember this rule. It's very important. So looks like everything is clear for now. So let's go to the leveler and check how we can open some leverage position. But before that, let's take a look on our previously opened position. We have here in range. That's good. Also, like we have quite small size, and PNL is close to 9%. This is awesome return, like 9% for 1 week. I think it's great. So now let's open another one. Here you can see the collateral, what you're gonna provide as collateral. I want to open some, for example, position with 10 USDC. Then I need to select leverage. Leverage is the, as I told you, the ratio between the position side and the depth. So if I will put here 3x, the most the bigger possible leverage on this moment right now, this means that our collateral will be multiplied on 3x, and the value of the position will be around $30. And you see, we can see here that the position size is about $40 because $15 here and $15 in AVAXes. So, but let's not jump to in the very end. Let's do it step by step. The another block that we have here is borrow ratio, and this is exactly that I told you. So with borrow ratio, you can decide in which ratio you want borrow two assets. So if I go full long, like I'm expecting the market to go up, and like in the example before, I want to borrow only cash to buy some more AVAXes and provide them as liquidity. I need to borrow full USDC. But if I expect market to go down, and I'm super confident about that, I need to borrow full AVAXes. But if I don't really know, I can be delta neutral, and also I can like be 75% sure that market will go down, but not 100%. So I still have 25% of my borrow being dedicated in USDC. That is why I so love farming and liquidity provision, because I don't need to make a bet like 100% the market will go there at this timing. This is very hard. If you interested about investing in something, you know that guess the market, all the black swans that you're gonna meet on your route, it's almost impossible. You always need to have some risk management plan, and that is why I so like our product, the lever, because here I can like super precisely select how sure I'm about to market to going somewhere, and even be delta neutral. Also, here I can see my liquidation points. So these red numbers, this means that if you simultaneously borrowing two different assets, this means that you simultaneously have two different liquidation points. And I can see them. So I have a short scenario liquidation point and a long scenario liquidation point. If I will move the borrow scenario, the one liquidation point will come closer and another one will go further, and vice versa. This is depending on what you borrow. And the last thing that we see here is deposit ratio. You see that for this moment, it's 50 to 50. This means that all my liquidity is spread equally. But if I will change it, for example, like this, meaning that I will borrow the same amount of assets in the same ratio, but now they will be swapped in some another way, so that I will have very little USDC and lots of AVAXs. This means that the price, when the price inside this DEX will go up, here I will have more liquidity than in case if the price will go down. And also this will affect our liquidation points, you see, so it changes the liquidation point. If I will change the deposit ratio to like mostly USDC, you're gonna see that now here I have more USDC and less AVAXs. This is, I hope you all remember this position distribution explanation that I have on the previous lessons. You remember this? So as I told you before, we as liquidity providers can select where to put our liquidity. And this is exactly how we select it, by these parameters, by deposit ratio. So yeah, $10, 3x. Let's, for example, make a bet that market will continue going up, but I'm not sure 100%, so I make it 75 to 25 of USDC. I'm sorry, this is short. Here, I expect market to go up. This means I need cash to buy more assets. So I put 75% of USDC. I also expect it to go up, so that I want to put it here. Deposit ratio. In this case, my USDC will be mostly used to buy AVAXs. I have some information about my position. I will have $7.8 and 0.6 AVAXs. That's good. Approve. My strategy is semi-long, as you see here. So now I need just to approve the transaction into my wallet, inside my wallet. Yes, approve. So this is incredible. Thank you. Thank you. I hope I explained it quite good. I know it's really tricky to catch it, especially with the like first 30 minutes of how you heard that. But trust me, with a more experience with you trading and opening different positions, you very fast you will feel yourself like a fish in the water. Yeah, here we have this position. So it's in range. Also, I was not selecting a range too much, just took the wider one. You can make it even more narrow if you expect market not be too how to say, Not such a big fluctuations of the price. Can you set at what gain you're willing to sell and take a profit? So this is for everyone to decide based on their risk management. In my experience, I'm not setting such points where I take profit or selling, because when you're delta neutral, you just can be in market as long as you want. And when you are in the market, you are gathering fees. So I always want to be in the market, and I'm always um, for the last 3 years, I'm fully in the market without any problems, gathering fees. So it is best to live at delta neutral. So it's really hard for me to answer what is best. This is super new financial engineering technologies and so on. Nobody really knows what is better. That's what is the best. It always depends on your expectations. So if you feel that market is hot and will continue going up, so the best would be to not be delta neutral, but borrow as more USDC and buy as much as you can. If you feel that market is already overheated and very soon we'll see some corrections, you better have some hedge. If you don't know nothing, and this is I think the best approach to trading, like I know nothing, I understand nothing, I just want to systematically earn some fees, I would recommend to stay delta neutral, yes. So everything depends on what your thoughts about markets, what is your risk management, and so on. I cannot see the questions, and it would be better to know what is asked and what you are answering. Yeah, the problem is that you all writing the direct messages to me. So I just have a bunch of different direct messages. Maybe we can ask Melanie to arrange some chat here in Zoom or something. I'm not really sure how. Yeah, guys. So I think you just need to write not to me, but to the everyone in the meeting, and so everyone will see the questions. What for someone that is not wanting to keep checking daily? What is the expectation, for example, from you if we invest 1,000? So I already here a third week in a row showing opening positions and showing the P&L, and for this moment it's nearly like 10% weekly. Not really 10. Here we got, so with a size of 84, we earned $4. This means like 9%. So if you have 1,000, you can provide it here, gain 3x leverage. This would be at 3,000, and 9% of 3,000 weekly. This is what you can expect right now here on Leveler. I showed you everything is super transparent. We all saw how we have everything in records, how I opened this position. So this is not a magic, and you already know how it's working. But it is always a point to change, because our revenue depends on how much volume being traded, how much fee generated by this volume, and so on. And these parameters are always maybe changed, maybe for now, while we have a bull market is very hot, a lot of people coming there, a lot of traders trading. So now you can have this number that I told you. There is no everyone option. I have two everyone. Better try to look one more time. Sorry if I missed it, but if we live in delta neutral, is it any risk of losing for liquidation? Yes, even if you're delta neutral, you have a risk of liquidation. This is because you constantly changing the value, inside the liquidity position in such when you provide liquidity, you can come with one amount of token dedicated in different assets and end with another. And it's always changing, like even 1% of the price change will change your portfolio composition. And your debt is not changing the same as the portfolio composition. So your long and short would be always different to what you borrowed. And that is why it's so hard to make it completely delta neutral. Usually we call it pseudo delta neutral because how to explain that without going too deep? The problem is I will share with the community some document where you can study the main problem of the liquidity provision is that you're changing your portfolio composition is changing all the time. So you're almost delta neutral, but you're not really delta neutral because of the nature of the liquidity provision. So even if you have borrow ratio 50%, meaning that you're delta neutral, you still have some liquidation points, and you can see them here. But what is good about leveraged farming is that you are gaining some fees every day, every second, and this fees already working as your collateral. So you're with every second day of farming a liquidity, your liquidation points will moving further and further, and you even can borrow some more, like if you will feel that your position is very good, the range set up perfect, like your strategy is good, the market is going or staying in the range that is comfortable for you. You can even use the fees, the generated fees as collateral to borrow even more. So you can on daily basis non-stop borrow more and more, and so create this snowball effect, the compounding effect, the main effect of the investing, and exponentially grow your APY. So even here in this example, I have already PNL of $4 for my $48 position. I can secure this, claim this yield, and add it to my position. And so this PNL will also earn some fees, and so we get this compounding effect. Will guys be able to add a candlestick charting in Leveler one day? I like the chart reading C. Yes, it's we already talked about that. Will do. unless, for example, of a black swan event when the price drops abruptly for AVAX or USDC, correct? Can you please write one more time, because I don't really understood what's the question. In case if the price will rapidly grow or rapidly fall, you have a risk of liquidation. So, but you can always like add some more collateral or not using leverage if a liquidation risk is a problem for you. All these positions that I showed you with the almost 10% of weekly PNL, they had one leverage, meaning that there is zero borrowed funds, so no liquidation price. You can see it here. All this position had no liquidation price, so they can leave permanent and generating some yield for you. But the problem is that such positions, for such position, you need to keep AVAX, and in case if AVAX will go down, you're gonna lose some value. That is why I would recommend for the people, for example, who are really afraid of liquidations and so on, and they want to be as delta neutral as possible, I would recommend to take really small leverage, like 1.5, and make it full AVAX, so that you will get a position even more secured than without leverage. It's really sound like something magical, yeah, that you gain leverage and now you're more more defended, more hedged. But it's true, because when you just provide liquidity, you need to have this AVAX on your inside your portfolio, and if you hold it and it's losing value, you're gonna lose value. That's why you need to have some small short. That is exactly what is called hedging. You hedge against price drop of AVAX. And your liquidation would be really, really far away in this case. Let's look. $75 per AVAX. So AVAX needs to do instant. I repeat that with every day, the liquidation point will go further and further, because you have more fees, so that your collateral is growing with the time. So that to get a liquidation with this scenario, you need price of AVAX making an instant jump to $75. I think it's impossible. So, but not a financial advice, always for you to decide. I like that there is no liquidation without leverage. Yes, as I just told, there is no liquidation, but you still can lose some value of your position, because the price of AVAX will go down. And to be defended against this scenario, you need to borrow some AVAX. But when you borrow something, you instantly have a liquidation. This is the way how lenders inside the people who provided money to the lending pool, that is their that is why they can be confident about their money will return back to them, that any bad debt gonna be liquidated. That's how market works. So here on Leveler, one more time, we have a few different players. So liquidity providers, lenders, and the decentralized exchange with the traders. And you can be like a lender who providing money for a lending pool from which Leveler, our decentralized application, is borrowing money to provide them into the decentralized exchange. Or you can be a liquidity provider, meaning a borrower, the one who borrows, and making a bet on more. Yeah, so the lenders, they are making a bet on small APR, and they have very small risks. The people who wants to trade and provide liquidity with leverage, they bet on way higher APR, but they also have some more risks. And this is only up for you to decide which is best, what strategy you think is the best for today market. Also, in the next lesson, I'm going to cover some more strategies. Also, we'll share some my data from my experience, what I usually do, how I mitigate the risks, how I find the ranges, and so on. We have 5 minutes till the end of the lesson. I'm waiting for your questions. And also, I already got some feedback from you guys. Looks like everything going great, but I think that you all need to open this position, and so you will have more questions, more. Really, you need, like, you can open all these positions even with like $10. This is not a lot for gaining some real experience in something that is very new and possibly I hope very promising. Do we have access to Leveler? Yes, of course. You can go to phoenixleveler.com and work with that right now. All you need is to set up a MetaMask wallet, Avalanche blockchain. Thank you guys. A lot of very good words. Thank you for that. Will there be a group that we can start applying this? What do you mean exactly? Thank you guys. Thank you too. Could go over collateral and debt. Yeah, no problem. We have some time. This will take.
Bitcoin through Cash App and send that. That was the fastest way to knock it out.
Yes. I hear somebody. So collateral, or even I would show it here. So the collateral is something that you give to the Leveler DApp, decentralized application, and while a Leveler has some of your funds as collateral, you can borrow against this collateral something from the lending pool, like mirroring trader. Mirroring trader, yeah, you can do mirror trading even right now. I'm open all these positions for you to just copy them. But the main idea right now for you is to just try it with yourself, even with like $1 or $5, whatever, just to know how it's look like, for you to feel comfortable that you're not giving your money to somewhere in the internet, that it's going to the decentralized application that is built on the on blockchain, and now you know how it's working. Is it possible to use a neutral position to obtain no lose situation by just receiving fee profits for lending? Yes, Yes. So so this is why the level were created, to create the delta neutral positions and receive fees from trading. Thank you, guys. Thank you. Do we have a time frame for mobile device user? What do you mean by a time frame? There is no time frames for the positions on the leveler. They are live long. Thank you too. Looks like we finished for today. As always, you can ask any questions and provide any feedback to the Melanie in the group, and she will share it with me. Thank you so much. As always, it was a pleasure. Thank you.
All right. Thank you so much, Vlad. Melanie had to step away. This is Alton. However, just want to always say thank you for always sharing your expertise, your professionalism, and your knowledge with the community. It is always appreciated and definitely not taken for granted. So thank you so much. And I know next week you're coming with more information to be rocking everybody's socks off. So appreciate that, guys. To everyone who are on here, I know you express the same sentiment. Thank you for joining. Once this recording is available, it will be shared, so you will be able to review it again. And like myself, I would say go back to the previous recording as well. Vlad has been sharing so much with us, and it's so important that we stay plugged in so we can truly maximize something that we can call our own. So with that being said, there is not a level up call with Ray today. So have a wonderful one. Check your emails. Remember, there's an email coming out from corporate today with some updates that you all want to be plugged into that. So with that being said, have a wonderful one. As always, take care. We absolutely love you all. May God continue to bless you all. Bye-bye.
Bye.